name is Matt Diserio, and I'm the president and co-founder of Water Asset Management. We invest in water and in all aspects of the industry in both emerging markets and in developing markets. However, we, having looked at opportunities both in listed markets and in private equity all over the world, we believe that the best risk-adjusted returns for private equity in water are actually here in the US. Why is that? First of all, the biggest emerging market on earth is water infrastructure and water resources in America. It's a $1 trillion market opportunity, number one, so the scale is there. Number two, there's no better set of rules of law and regulatory regime around water, which is obviously really important for any very long duration asset, than we have here in the US. So when you combine the risk-adjusted return potential with the scale of the opportunity, it's superior here in the US compared with India, very difficult place to invest, let alone doing it on a private equity basis. Brazil, Africa, China, et cetera, et cetera. So that's why we invest all over the world, but our private equity is focused primarily here in the US. The question is does water investing fall into core infrastructure type returns or opportunistic? And the answer is, as with just about everything related to water, is it depends. So for example, regulated water and wastewater utility investing is, by definition, core infrastructure kind of return, risk-adjusted return profile investing. Water resource investing, on the other hand, is a higher return, more opportunistic kind of an investment strategy. Both on a risk-adjusted basis are extremely compelling, because on regulated and long-duration water infrastructure, what you're often presented with is extraordinarily high visibility, inflation-protected cash flows, often with a A-rated or better quality counterparty. And with regards to water resources themselves, and by the way, on the infrastructure side, we express that both privately and publicly through listed equities. And there are times when you're able to express water infrastructure with much greater value and cheaper through listed equities than through private equity. On the water resource side, which I'm describing as more opportunistic, the risk-adjusted return potential there, as I mentioned, is higher, where, in water rights, we're targeting 20% unlevered IRRs, but where the risk associated with those investments is also equally low. And the reason is that we acquire those water rights at their agricultural appraised value. So if we happen to not make an underwriting objective on monetizing some of that water at a multiple of what we paid for the water right and the farm as a farm, our downside is we own a farm that we paid farm value for. And we've generally consolidated those assets, so we've created incremental value that way. We've always improved the farm with some additional investment. And obviously, these farms always have bulletproof water rights. And in an environment where climate change is impacting water supply, those farms, just as farms, become more valuable. Climate change is bad because of its immediate impact on the hydrological cycle. We're not making enough progress on reducing carbon to mitigate climate change for the future. I mean, building a solar plant today doesn't have any impact immediately on carbon emissions for the future. Whereas water is dealing with the world we have now, like it or not. Flooding has intensified, wildfires have intensified, drought and impact to water supply reliability has intensified now. We all know that, we can see that now. And investing in water companies and water assets really is immediate climate adaptation, whereas renewables investing, which is 95% of what people think about and talk about as it relates to climate change or impact investing is more about climate mitigation for the future, which is obviously also important, but we are very much focused on driving a more equitable balance of both awareness and, really more importantly, capital allocation between renewables and water as it relates to climate change and impact investing. Every water company and water asset is either cleaning water before people use it so they don't get sick, or cleaning water after it's used so people don't get sick and the environment is in a position to, thrive and prosper, or providing reliable water supply for the benefit of communities, agriculture, the environment. I don't know what's more positively impactful than that. ESG is more of an analytical framework for companies that are in an evolution of continuous improvement around sustainability issues and measurements. The world needs impact now. And water, because it's so measurable, it delivers some of the most measurable positive impact metrics of really any industry. It's very hard to measure carbon, for example. It's very easy to measure water. The water industry, institutional investors are finding, is a very unique and very specific industry. And it doesn't welcome an approach that is not specific to the industry. People who've had experience investing in oil and gas, electricity, for example, related infrastructure, ports, roads, highways, sometimes when they approach the water industry with that language and that sensibility, they find themselves not necessarily generating profitable returns. The water industry is a very, very unique industry. It's a different language. It's a different set of sensibilities. It requires two things, basically: total transparency and a willingness to approach it in a completely collaborative format. There's lots of really interesting things going on in technology as it relates to water. New media, hydrophilic membranes, which are more efficient with regards to energy consumption and the amount of water that's actually treated as opposed to discharged. The miniaturization of water quality analytics. All of these aspects of technology are developing, but the most important technology in water is not technology, it's regulation. Without regulation, there's no incentive to implement innovative technology. And that's probably one of the greatest myths around water-related investing, is that we get the call all the time from people who are interested in water, and they're like, oh, what's the greatest new water technology? The greatest water technology is excellent regulation that requires full cost pricing with total transparency and enforcement and accountability. And where you have that umbrella, that's where we see the beginning and implementation of some of these new and important technologies.